right? So that's another. Let's look at GDP. GDP in the third quarter, I think they're projecting about 2%, right?
Which is
the
not very
the
good
expectation
considering what
was
we need
about
to come.
7%, right? So we have here a situation where GDP was 2%. It's not a booming economy whatsoever, and yet inflation is going through the roof, right? Let's look at another number. Average hourly earnings, year over year, down 1.2%. So people are earning less today, right, than they were a year ago.
Which is interesting because if you look on the news, you'll see wage growth, wages have increased this year and so forth, but people are working, average hourly earnings is telling you people are working less hours.
Exactly.
In total.
Right.
And so you're bringing home less income on average than you did last year.
And if the economy was booming, it'd be the other way around. I mean, overtime will be going through the roof. People will be working extra hours, not less hours, right? Now let's talk about wage growth, because I mean, I know that the government is making this big idea or big push into how well the wage growth has been, right? And certainly has picked up. There's no doubt about it. I mean, when you look at the natter of 2020, of course everything is going to look better, right? But back in December of 2019, wage growth was 4%. At the end of the third quarter, in this third quarter, was 3%. So wage growth once again was better in 2019 than it is today. So everything that we can look at, all the statistics we look at, indicate that at the end of 2019, things were booming a lot better. People were working, supply wasn't a problem, demand was large, and yet there was no inflation. Inflation at the end of 2019 was 2.5%, and today we're looking at 6%. So where is it coming from? That's the key. So in other words, why is it there, right?